University of Virginia, and Professor Shirley Lin from the Chinese University of Hong Kong for a special event to talk about a very important topic about leadership. The topic today is why business leaders need to understand political economy, assessing political risk, and shaping economic policy. 2 weeks ago, I have introduced the background of Professor Harding and Professor Lin. And Professor Harding was the Dean of the Beckton School of Public Policy, and he is the expert about Chinese political economy. And I learned from the very beginning about the Reform Acts of mainland China from Professor Harding, from his books. And he's an international known expert about this field. And Professor Lin has very extensive experiences in the practical world, in Goldman Sachs, among other financial investment companies. And Professor Lin is also teaching at the Chinese University of Hong Kong. And her new book is going to be released probably early next year, and I look forward to it. And today's lecture will be divided into 2 parts. The first part will be delivered by Professor Harding and followed by Professor Lin's speech. And after the lecture, we're going to have about 30 minutes of Q&A and interactions, and we can have some more thorough discussion on this topic and related topics. Let's welcome Professor Harding and Professor Lin.
Well, thank you very much, and good evening, everybody. It's a great pleasure. I know I speak for Shirley as well as myself. A great pleasure for us to be with you. The answer to the question of why do business leaders need to know something about political economy is actually fairly obvious. You operate as a business leader in an economic environment, in a marketplace. But that marketplace is fundamentally shaped by decisions, by policies, by regulations, by laws that are shaped and formulated by politics, by governments. The study of political economy is the study of that interaction, the way in which the political arena, the political sphere, especially governments, shape the economic sphere, the marketplace in which businesses operate. What we're going to do tonight is to examine in a little bit more detail 2 specific aspects of that intersection of politics and economics. Shirley will be talking about how business leaders can actually shape that political environment, try to influence policy. I will be taking a slightly different perspective, looking at the subject, the topic of political risk, and to say a little bit about what that is and why business leaders need to understand it and how they can try to manage those political risks. What Zagan did not say in his overly generous introduction of me, and I have to caution you, I work far less on China these days than I used to, so I'm a little nervous about answering questions about China, though I understand this course is mainly about it. But I did spend 2 years, a few years back, working for a political risk assessment firm in New York called Eurasia Group. It's one of the very best in the United States. I was the director of their research platform, and my job, among other things, was to do a major study on political risk in China, looking ahead 5 years, and then secondly, to try to codify and put together their research methodology as a way of helping prepare new analysts for taking up their work. What's political risk? It's very simple. It's basically trying to assess the implications of uncertainty in the political environment for a business. How might future political developments provide both challenges and opportunities for the business in question? I raise the question as to whether political risk can ever be a positive development. What do you think about that? When you think of risk, what do you think of? Challenges, opportunities, dangers, threats, what? What's the first thing that comes to your mind? people would say, yes, I'm sorry.
Yeah, sorry, just that by the definition, between uncertainty could also be a positive change.
It could be positive change, exactly. And so I'm glad to hear that, because most people think of risk as only downside. I can remember I was once asked to give a lecture at a Confucius Institute, if you've heard of those, in the United States. And because I had just done a major study of political risk, the one that I mentioned, I was said I'd like to talk about the political risk of doing business in China. And I got the word back, oh no, you can't talk about that, you have to change the topic. Because risk is bad, risk is downside. And I said, no, it's not. Risk simply means uncertainty. There's upside and there's downside risk. So it simply means the uncertainty that is inherent in a rapidly changing world. So political risks can be upside, they can be downside, or they can be some combination of both. Now, how does political risk assessment differ from general political forecasting? They're related, but there is a simple but fundamentally important difference. General forecasting asks the question, what is going to happen? Political risk assessment asks the further question, what difference does it make for a client, if you or for your boss, depending on who you're doing it for, obviously. The example that I give is imagine a weather report. Weather reports are probabilistic, right? They have to do with uncertainty. We're getting better and better at managing and understanding that uncertainty. But still, a weather report is a forecast of future weather. I can say there is an 80% chance of rain tomorrow. That seems straightforward, but what difference does it make? Imagine that you are in a rural area that is stricken by drought, and your client is a farmer. That is a very positive forecast, right? It's going to rain, thank God. But suppose right next door there is a park in which somebody is planning a very elaborate outdoor wedding. That's really bad news, because you run the risk that the wedding is going to be disrupted. And now imagine that further down the road, there is a concert hall indoors, and they're planning a concert. For them, that weather report may be totally irrelevant. It doesn't matter, because it's an indoor event. So basically, political risk assessment is forecasting the implications of uncertain political developments for a specific client. And the client focus is fundamentally important. So that's what leaves the analysts from answering the question, what might happen, to so what? What are the implications for the client? As I just implied with a simple example of the weather forecast in a rural area, the same forecast may suggest positive developments for one client, negative consequences for another, and something totally irrelevant or inconsequential for a third. Let me say a little bit about the evolution of political risk assessment, because that will be a way of understanding the content, the subject matter that political risk assessment entails. Political risk assessment, as a serious part of business analysis, traces its roots back primarily to some developments in the 1970s, particularly the Iranian Revolution and the nationalization of oil companies operating in that country, and also, you could say, a little bit earlier, but about the same time, the Arab oil embargo of Israel and Western countries aligned with Israel. These basically highlight the fundamental consequences that big government decisions and political developments could have for foreign firms. Nothing is more fundamental for a business than having your assets expropriated, obviously. That is the fundamental political risk. Nothing is more important for a market than to have a major group of suppliers decide to withhold their goods, to embargo their goods from that marketplace. So the initial focus was on these big policy changes. But over time, political risk assessment has begun to shift from big changes in government policy, whether they are by host governments or home governments, to much more granular changes. But changes that, although seemingly small, can have make a fundamental difference for business operations. For example, even a small change in a tax rate can make a big difference in a very highly competitive marketplace, where profit margins are so small. Even small changes in taxes and in tariffs and in regulations can make a big difference. So changes in tariff and trade policy, changes in competition policy, changes in tax policy and credit policy and industrial policy, all the things that I've listed here are just a few examples of the kinds of things that governments decide, that they regulate, that they tax, that they subsidize, that they influence, that can make a major difference for business. And if you are in the business of business, you have to anticipate, try to forecast, and try to respond to those risks. The risk of change, could be good, could be bad, is a major subset of political risk. Oftentimes you'll hear political risk described as regulatory risk. This is a very standard way of putting it that seems right because it focuses on government regulation, but is actually fundamentally misleading. Because political risk is not just about what governments do. It's about what happens in the political arena more generally. So that political risk assessment has begun to come down from the big picture of, or the big sphere of regulations and laws to the political dimensions of other market and non-market risks. For example, foreign exchange risks can be fundamentally affected by the political climate. Most obviously by what happens, by what central banks do, or what foreign exchange setting bodies of governments do. But it can also be affected by political developments that can give foreign exchange traders greater or less confidence in the economy of the country, and therefore in the in the foreign exchange rate of that country. Operational risks, that's a standard category in risk assessment, in enterprise risk management. But you can imagine all of the things that either governments or political developments in society, all the things that can happen that can disrupt operations. So for example, unrest, protest, Occupy Central in Hong Kong. We'll give one example of this in just a moment. These political and societal developments can have a significant effect on business. The way that I found most easy to get people to think about it, and surely we'll talk about the globalization of so much of business, remind you of it, is to think of your supply chain, think of your operations globally, even stick little pins in the map to think of centers of activity and the supplies and communications chain linking them, and think what could go wrong, either in terms of government decision or some kind of social turbulence and unrest. Reputational risks. Here is a highly political factor. Not just what governments say about you, your business, your sector, but what society thinks of it. That is seen as, in the analysis that we did, as a form of political risk. So the point is that it's far more than what governments specifically do in terms of that long list of taxes, tariffs, safety regulations, and so forth. It's also basically what societies do in terms of generating operational risks and reputational risks for a firm in question. Something that I had to figure out, because nobody could explain it to me, I had to figure it out as I tried to systematize the company's work at Eurasia Group. was why this seemingly unrelated set of risks were included in political risk assessment. Communicable disease. I was working in the company when the N5N1 avian flu scare began, and it began to spread, especially in this part of the world. We also had Hurricane Katrina in Louisiana, and the beginning of the notion that this was related to a more fundamental phenomenon called climate change. Almost by accident, these began to be the subject of political risk assessment. Can any of you figure out why that would be? How are these political risks? It seems that disease flu is not government action, it's not political. Climate change is not political. What's the connection? Why is this really a political risk in some sense? Anybody have a thought on that? Yes?
I mean, climate change basically results in political policies.
Right.
Like, for instance, getting rid of coal mines or any other nuclear.
Right.
Yeah.
So the climate change is gradually forcing some kind of political response. We just have the new agreement between China and the United States that begins to put caps on carbon emissions by the two countries. Anna, I see your hand fluttering there. No. When you think of a hurricane or a typhoon or an earthquake, who responds to it? To a large degree, governments respond. And so the response, the ability of a society to cope effectively with damage that would then disrupt, if it continues, your operations, your supply chains, your business, that's largely a question of government capability, as is communicable disease. So it is not, obviously a political risk, but the ability or lack of ability of governments to respond, to anticipate, to mitigate these seemingly non-political risks is an explanation why political risk firms are called upon to analyze them, mainly with the idea of government response. So when my company was asked by the US government to begin to develop basically a disease, a communicable disease, an analytic capability, what we were focusing on was trying to analyze the ability of governments and their public health systems and even their militaries to respond to an outbreak if it should occur. The other thing that we began to realize was that while political risk assessment initially focused on multinational corporations as clients, I mentioned in particular international and national oil companies, that other organizations and groups also could easily become interested in political risk. The most obvious first category is governments themselves. Basically, the intelligence agencies of governments, the CIAs and their equivalents around the world, are dealing with political risk. A different set of interests than a corporation, but basically the question of how could political developments affect the national interest of the country in question, either positively or negatively. So even though the word isn't usually used when talking about national intelligence, it really is the same thing. It's political forecasting, but this time for a national government as the client, rather than for a multinational corporation as a client. NGOs, they almost never think about political risk, but in fact, they are as much affected by it, potentially, as is a for-profit company. They also have operations networks. They have operational risks. They have reputational risks. They operate in a regulatory environment where governments, and we see this both in China and in Russia, can make it easier or make it harder. I mean, make it impossible for them to operate. So NGOs should, in fact, be far more interested in political risk than most of them are. Most of them say, well, we're not governments, we're not for-profit, therefore it doesn't affect us. Wrong. They can be as fundamentally affected by political risk as can for-profit business for government. One of the most interesting sets of, wrong button. Sorry about that. This was our main set of clients were asset managers, because political developments can affect prices. Now, I confess I've been busy all day, didn't do my homework. Did the Taiwan Stock Exchange go up or down today? Anybody know? Nobody knows? Anybody look? What political development that was largely unanticipated occurred over the weekend? Yes?
I could imagine it went down because the KMT lost, and so the KMT is pretty closely related to China, and so due to this change of the government, I could imagine that the stock market reacted negatively.
Yeah, that would be a very good forecast. So the question is, that is what we would have said. The only question that we would have had to then further answer is whether that had already been priced in. In other words, I don't think it was a huge surprise that the KMT lost. What was the surprise was how big the loss was. So my hunch would be it was inadequately priced in. And so my guess would be that the stock market went down, but maybe not as dramatically as if this had come as a big surprise. So understanding how markets are going to respond to these kinds of political changes is a major task for risk analysis. And understanding basically what's anticipated, whether this is already, as I've said, priced in or not, whether the change is big or not. One of the big things we had to understand in the United States was that markets actually liked divided government, because divided government meant smaller change, meant less risk, because government action was less likely. So that basically markets didn't care whether Democrats or Republicans won, why they simply liked the idea that government would be less likely to fundamentally change the rules of the game. So in serving the client, you also have to listen to the client if you're in political risk assessment, and to try to figure out how they would respond, because you're basically forecasting how they and their colleagues will shape the market. And so basically, what asset managers do is to take a look at and to try to project the impact of political developments on the prices of the things that they trade, whether it's commodities, foreign exchange, equities, which is just what we just talked about now, or sovereign debt. One of my former graduate students who worked at Eurasia Group made his reputation and a fair amount of money by figuring out the way in which you could forecast copper prices, major traded commodity, and copper futures, by looking at developments in China. Can anybody imagine and guess what government policy he looked at in order to forecast accurately the trend in copper prices? Think about what is copper used for. Copper wire is used for what? In what? It's used in buildings. It's basically electrical wiring. So that when the government of China announced a policy that was either encouraging urban construction or discouraging, either heating it up or slowing it down. So that could be in terms of direct capital investment or by various kinds of interest rates. He basically said that will shape the demand for copper in China, and copper prices are increasingly set by China. So that was his bet. He was correct, and as I say, the clients who listened to him made a lot of money in anticipating, because as you know, in markets, even small changes in price can have big impacts for clients if they're heavily invested in, have a big stake in them. I'm just going to raise this question because Shirley's going to talk about it more than I am. But simply, if we have time in Q&A, because I think I'm running out of time here, is how risk assessment can be integrated into strategic planning. this is not just a matter of sort of day-to-day operational decisions, but basically it is beginning to think, trying to encourage you and other business leaders to think about how this risk assessment needs to be incorporated into your long-term strategic planning. I assume you're all familiar with SWOT analysis. Anybody know what SWOT stands for? No?
Strengths, weaknesses,
and threats. Right. So the question would be, what political developments can affect the strengths, weaknesses, opportunities, and threats facing your business, right? So integrate that into SWOT analysis. There's also a new kind of thinking about the future called foresight analysis, which is basically looking even longer term at basically how our environment is going to change and whether the same set of strengths. The SWOT analysis is basically how we're doing now and in the near term. Foresight analysis is how is the longer term going to change in ways that might fundamentally change our SWOT analysis. That what were our strengths are going to become our weaknesses, and vice versa. This is now beginning to get into what Shirley is going to talk about. As always, managing political risk, any kind of risk, can have two or three aspects. How can it be mitigated? Obvious, you avoid it. It's too risky, you avoid it. You diversify. Our main client for that China project that I did for Eurasia Group was the Japanese External Trade Research Organization. And their big conclusion from our work was called the China Plus One strategy. China, they said, carries a lot of risks, but it also carries a lot of rewards. You therefore cannot avoid China, but you cannot become overly dependent on China. You need to diversify. Our company should be looking at China Plus One. Then the fascinating debate, which we could have studied had they asked us to, but they didn't at that time anyway, was what would be the one? And does anybody want to guess? There were two candidates for being the one in China Plus One. Think similarity and difference. What would be the most similar to China? Vietnam. What would be the most different? Large emerging market. India. So basically, did you want something that looked like China and therefore seemed very promising, but might, for one way or another, have somewhat different outcome, maybe better? Or did you want something really fundamentally different, and that would be India? That might have a huge upside. But there's also not just avoidance and hedging and diversification, but there's managing the risk. And here is an example. Sorry about that. Just tilt your head 90 degrees to the right, and you will be able to see it. How does politics affect one particular industry, and that is the hotel business in Hong Kong? And I'm not sure, shall I just indicate the slide, or do you want to talk about it, Shirley? It's a way of training. Want to finish? Well, basically, you're all aware of the Occupy Central movement in Hong Kong, which, since we live there, can actually be called more the Occupy Hong Kong and Occupy Admiralty. If any of you have ever been to Hong Kong, it's really those areas that are much more effective than the central district. But these demonstrations have been disrupting business, transportation, for more than a month now, and it's actually 2 months now, right, almost. And this gives you a sense of how some hotels have suffered. The cancellation of business. Oh, I'm not supposed to give it. Okay, Shirley will talk about it. So as I said, basically, Shirley is going to talk more about how businesses can manage risk by getting involved in the policy process, shaping that political environment. And so I'm going to turn it over to her with my thanks for your attention.
So Harry and I spent a few days already actually doing the speech. We had a big argument because he says I should go first and he should go later because the best always comes at the end. I said, okay, well, that's fine. But after he wrote his speech, I said, your speech is entirely abstract, theoretical, and irrelevant because this is in China. So he says, well, okay. I said, you can rewrite your speech or let me end the speech. So in the end, I won. I got the second slot. But I will say his is much more important because it's abstract, conceptual, and it's universally applicable. And he left me the unenviable position of talking about the empirical application of what he talked about. But I think it's equally interesting because then I looked through your syllabus and I decided I had a better role because your syllabus is very, very interesting. And I know Professor Lung's work. I was his student, effectively, when I got my PhD. He was on my thesis dissertation committee. So he knows my work, and I admired his work for many years already before I even met him. So I decided to talk about what you had studied in this class in my 20 minutes, which I surely will be 30 minutes, because I've also decided to let you lecture me on part of my section. So I'll be asking you a few questions. But to transition from Harry, he is talking about political risk. Let's apply it to what's happening this week, today. So I'm sure a lot of you saw on TV what happened in Hong Kong yesterday. Did any of you note? No?
Riots again?
Riots where?
Well,
We've had Occupy Central for more than 2 months. What was yesterday's event? Quinton.
Around the local government headquarters.
Yes, Admiralty. So all along we've had different sections of the main drag being blocked. Nathan Road, for those of you who've been, and as well as basically what we call the coastal road, from all the way from Causeway Bay to Central was completely blocked. So unlike the Sunflower Movement here, they block basically New York City, where Harry and I are from, 5th Avenue. So this is really dramatic because you cannot go to work, you cannot go shopping, you can't go to the park. And so I said, okay, let's transition from the generic framework of political risk to real money being lost. I sit on the board of a company that has several hotels in Hong Kong. Literally, this is what they had just sent us. So it's a confidential slide, so don't write it down, and I won't tell you the company name, which is public. But anyway, they sent us a slide because they said, well, look how the business has been affected. Okay, it's all initials, so you can't really tell which hotel. But you can tell this is the hotel that is most affected, right? This hotel is in Tsinghua. This one is in Jordan. How many of you have been to Hong Kong? Half the class, so that's very good. Where do you think this hotel is located? Central? No, but the Mandarin Hotel is seriously affected. On the other hand, the Mandarin Hotel, which is in the middle of Central, has regained all of its business plus more in the last month. Because everyone now realizes not having traffic is excellent. So suddenly all the investors are returning to the Mandarin Hotel so they could walk around Central without cars. But Kowloon is a different story. People go to Kowloon because they go there to eat and shop. They don't do business in Kowloon. So this hotel is located in Mongkok, right in front of the student movement where they sleep. And so there's no way of getting the trucks to go there to deliver the food, to take out the garbage, and tourists don't want to go where they can't get a taxi to take their shopping bags. And so everything is, the cancellation rate, as you see, is 54%. The only thing that has not been canceled is weddings. Because Chinese people book weddings 1 year in advance, they cannot change the date, they go to the fortune teller. So all of that is unaffected, miraculously. And so coming to what Henry's talking about, political risk. Why is this important example of political risk? Well, because who runs Hong Kong? What kind of people run Hong Kong? Who manages Hong Kong? And exclude the answer of Beijing for a minute. Who actually runs Hong Kong on the ground? What is your feeling? pretty close by. Yes, Jorge or Georgia?
Yeah,
Jorge?
businesses or the financial sector?
Excellent. The business sector runs Hong Kong. Basically, the 5 property tycoon, I could extend it to 10, run Hong Kong. And why do I say that? Because they run most of the stock exchange and run most of the assets. And Hong Kong is an asset-rich city that has very little manufacturing and it's entirely service-oriented. And the real estate tycoons also run services. Our largest real estate owner also owns the largest grocery chain, owns basically the electricity company. And so, do they shape economic policy? Do they decide when Occupy Central ends? You could say no, and you could say absolutely yes. And so that's the question for my part of the presentation. How do political leaders, well, how do business leaders think about economic policy? Are there takers or givers, or they're rule breakers? So on that note, let's talk about something that I think you can contribute to this lecture, because I understand most of you are from outside of the United States and outside of Asia. And from your names and faces, I took a quick look. I can't really guess where you're from, but I can see you're not from the places that I'm more familiar with. So I'm going to ask you a few questions. But the nature of government and business all over the world is very much dependent on norms and culture and institutions. So I'll just give you an example because I'm essentially half American and half Taiwanese. So from my years of working at Goldman Sachs, I worked for many people who became government officials. So I worked for people like Hank Paulson, John Corzine. I don't know if you know these names, but John Corzine was the New Jersey governor, and Hank Paulson was the Secretary of State, Treasurer of the United States, and so was Bob Rubin, and they were all business leaders essentially with no public policy experience. But part of the spirit and the culture in the United States is, as we know, both of us teach at University of Virginia in the fall, is what Thomas Jefferson would say, the civic participation. You give back. And part of being successful in any field is you give back to government. You serve in government in order to contribute because you have had a private life as a lawyer, as a business person. So I find Americans extremely idealistic. That is not to say their actions are noble in the end, because they become acculturated to certain actions once they join the government. But I think that there's a lot of values inherent in the United States system where business and politics can be, I would say that you would cross the sectors, you would cross the fields. But of course, there's a lot of controversy about that. And the most famous scholar who writes about this is named Simon Johnson. He's at MIT. He's a political economist who writes about the collusion of finance and government in the United States. And his view, this is what leads to the global financial crisis. Basically, too many business people are involved in government. Therefore, they do not regulate subprime prices, derivatives, commodities, and today's world, of course, as everyone knows, trading. What is the relationship between government and the private sector in Europe, in your view? In your different regions or countries, or it doesn't have to be where you're from, what you're familiar with. Anyone want to tell the class what they think? And I give you an example of many people who don't believe that people contribute to government. They think that any kind of business sector involvement in business is lobbying, is self-interest and directed. Yes, Johan?
I'm from Germany, and I think in Germany it's fairly two-sided and fairly interactive. I believe that it goes both ways. Like the government, before they apply policies, they talk to companies, and companies also talk to the government. So I think it's fairly interactive and fairly even at the moment.
So you think that business actually plays a positive role in deliberative democracy, let's say, in contributing to government's policy shaping efforts?
Whether it's always positive, I don't know, but they contribute.
They contribute,
yeah.
Okay? That's from a German who runs Europe, so thank you for that. Anybody else? You're ready.
Yeah, I live in Germany, and last semester I did a project for a major German insurance company, and
Which one?
Allianz, and we saw how they try to we could call it lobbying, but with a view for the next 50 years. So they see the demographic trends, and then they try to influence politicians to direct their policies towards, what will affect the company in the future. So
thank you. That's a view that will be closely aligned to people at Goldman Sachs because we were very involved with Allianz. So yes, a lot of it was lobbying effort related, right? Okay. Anybody else? There must be some people who don't think Germany is the norm in Europe. Yes.
I'm from France, and I think the government, whenever they want to change something, especially when it affects businesses, will talk with companies. It also have to come to us with a task force, which will be unions, which are really powerful in France.
Right.
And they could strike whenever they want, especially when it affects the public sectors. So they have to know whether also it's good or bad, depending on the point of view, because unions can bring social changes. I think within the last few years it was more bad affected our the economy or businesses.
You think it's been negatively?
Yeah, because there's blocking decisions, so making the changes more slowly than they should do.
Right. Very interesting. Actually, I was in Paris this summer when the railway strike happened. And then I was again in Jerusalem, well, after the terrorists, basically, the death of a few rabbis, you would probably all know, led to a strike of bus drivers, Palestinian bus drivers. So everywhere I go, I run into strikes, so I'm a little bit worried about traveling these days. But that's very good, the participation of labor. Yes?
I think it's not only union, but also like union at work, in business, and also political union. Like in Europe, when are making a decision, usually it's very complicated, and even like government, each other, they try to influence. And in Europe, I would say like Germany and France, and especially like England, like on the last budget, like England was struggling and fighting in order to pay like an increase in the budget. So definitely we have also to consider countries and bigger political units such as the European Union.
Do you think you're European, or which country are you from?
France.
Do you feel more French or more European?
French.
There's no reason to ask that question, it's obvious. Okay, anybody else? Yes?
Well, I think that there is, of course, an interaction between politics and business, but I think that this interaction affects negatively the government policies in many cases.
Business participation negatively affects
absolutely
policy,
negative.
okay?
And into that, especially because in Italy, there's our last prime minister,
Or meaning in Italian?
Yeah,
Okay.
absolutely. Silvio Berlusconi was in a terrible position of conflict of interest because he was both the prime minister of Italy and one of the biggest business owner in Italy. And in our case, we perfectly know that affected negatively the policy that he did during his career as a prime minister. So I think that in general, business affect negatively policy, negatively the government policies, whether there is this interaction.
Well, having an Italian answer this question is very interesting because, of course, whether an Italian leader is a politician or a businessman is very hard to tell. And, I'm not sure it's one contributing to the problem of the other, or that it's just that by having power in one sector, you would necessarily move into another. At least most Italians tell me that. But anyway, great. Italians, and anyone else? Well, it's fascinating because all of your answers indicate two things. One is a description of reality, the other is the norm, what you think is right and wrong. So there's two parts to it. One is actually what's happening, and the other part is the value system you have, what you think is right and wrong. As Umberto says, they shouldn't be involved. So if Umberto could write the Constitution, he would say, no business people should be involved in any kind of private sector activity, therefore you wouldn't be having any crossover. So let's come to closer to home, to this class. So what is the relationship in Asia? Now that's a really complicated question because again, it's a culture that actually has a lot of commonality, Hong Kong, Taiwan, and China. And I thought I'll do a little comparison because both my research as well as my empirical experience in banking has been in Greater China, effectively, primarily. And the relationship is so complex, yet so similar in some ways. But let's take an example of the easy one, which we had already gone through, which is Hong Kong. Of course, we all know in Hong Kong, as we said effectively, the Communist Party relies on businesses to provide stability in Hong Kong. And what does that mean? They provide most of the input to government, and so before the government decides policies, if you read the front page of all Hong Kong newspapers, it's always some business leader saying whether Occupy Central is good or bad, right or wrong. Now, this has been somewhat diluted in the last few weeks, as you see, because it has not been a very attractive way to engender public consensus on what to do with Occupy Central. But since the handover in 1997, the relationship between local government, I would not say central, local government and the business sector in Hong Kong is very close. We don't call it collusion because before that it was the colonial government, and the colonial government was the opposite. The Chinese do business, the English run the place. And it was extremely clear-cut, except of course the English also run business if they wanted to. Swire, all the trading, Jordan Matheson. But this is, of course, a very different kind of situation than what you would call state capitalism, which I know in your syllabus you've already studied, of course, in China, and developmental state or post-developmental state in Taiwan. Now, how do we differentiate those? What do you think is the relationship between government and the private sector in Taiwan? All of you have been here as exchange or have been here for longer than that, a few months. What do you see compared to your own country? What is a post-developmental state? Do business leaders here run the government? Are there business leaders in government? Because essentially, no, this is not Hong Kong. It's very different. Who is in government who are the amateurs in the Taiwanese government? Let me be more blunt. There's always amateurs in government, which is business leaders going into government. They're amateurs. And this is what happens in America, of course. Who are the amateurs in the Taiwanese government? If I could be so direct. Directly impacting this last election. Academics, exactly. Look how many PhDs are in the KMT government. Not to knock myself over, and Zegang and Harry and all of you who have PhDs here, I'm sure some of you do, overeducated people are not suitable for governance. Governance is a dirty business. Now, okay, that's a really interesting thing. Why do PhDs go into government? Well, it's the reverse. Chinese respect degrees, certificates, and so everyone likes to be overeducated. If you're overeducated, well, the best way is to be a doctor. Then you can be a mayor, because being a doctor in Taiwan is the hardest degree to get. So that means you must be the smartest. And I know that French here all agree, because the French system, the German system, many systems in Europe are the same. You have to go to certain schools, meet certain friends, and make certain pals, and get into a certain network, and you are the smartest. And of course, India, Pakistan, you name it. This is a very traditional society. And so being the top student enables you to get respect. And even if you're an amateur and you've never studied public policy, so I always tell Harry, he has no business in Asia. Nobody needs to study it. They just need to prove that they're the smartest. Then they can go into politics anytime. But business people are not respected in the same way in Taiwan. So they don't retire like Hank Paulson does and go become a treasurer. Because business people are self-interested entities, individuals or institutions. And so that's why there are a lot of Chinese adage that says, you know, basically business people are at the bottom of the social rung, as we all know. And therefore, the relationship in a developmental state is that the state, the politicians, again, who are the best and smartest people in the society, should lead or guide the society. And as Zegang's writing will tell you, they have market-conforming policies, or as the World Bank would tell you, or as many people would know from the Washington Consensus, as long as the policy is market-conforming, the private sector will follow and be enabled, be empowered to be more competitive internationally. So that's the developmental state, or post-developmental state in many countries, and Japan and Taiwan are somewhat stuck in this model. In fact, I visited a legislator on Friday afternoon right before the election to talk about, let's just say she's a green legislator. So we asked her about economic policy and why is STA being stopped and how this will affect the economy. So she says, you know, it's really a pity. We've lost the spirit of the developmental state. So of course you can imagine this person has no economic experience. She's a legislator, she was a lawyer, so she says that unless we can lead the businesses, where would they go? So I thought, well, Taiwanese SMEs, small medium enterprises, had grown on their own without very much government support. So Taiwan has a different sort of way of managing developmental state compared to Korea or Japan. And that's an entirely different class, which I teach in Hong Kong as well. And I know Zefang also teaches and writes about. But the way Taiwan had decided the norm would be was the Taiwanese government would lead the major sectors, semiconductor or steel, the most important industries, and especially banks, would be run by the government. And the other businesses could be bottom up. They could get their own loans, credit. Financing is very important, but the government was really halfway there, and the people that were allowed to do business were separated from people who did politics. And so there were different tracks, as they call it. I call it track 1, track 2, in this sort of societal way. But in a state capitalist system in Beijing, how does it work? What kind of people run the government in Beijing?
The army.
Hmm?
The army.
Wow, Umberto says the army. Well, I guess we could say it even though it's recorded. Okay, the army is a very important part of the government. Who else runs that? So the army, very interesting because Harry gave a speech in Hunan with thousands of students last year. And one of the students says, okay, you run the public policy and leadership school at UVA. I want to be a general. So what should I do in China? Go to your school? He says, that's an interesting question. He says, where do Americans go to school if they want to be a general? Okay, we get to answer about the different academies in West Point and in the United States, but yes, the army in America, in China are run by professionals, right? Okay? Okay, who else? Who else runs the government? We've got the PLA. Who's behind the scene, really? The rise of China doesn't really want the PLA to be on the front line. So who else runs the government? Are people who go study and get a PhD in Berlin or in at Stanford coming back to run the Chinese government? No, there are no returnees. Who?
I think there's a pretty clear political class in China.
They are professionals. Basically, you need to want to be a politician. You need to grow up to be a politician. You need to nurture the classmates, go into the business. You have to be good. It's very competitive. The Communist Party is no less competitive than becoming a partner at a law firm. It's the same as trying to be Christian Lagarde. It's just as difficult. It's much more difficult because it has 1.3 billion people. And guess what? Everybody who comes out of China in the early days, in the 80s, when I went to Harvard, wanted to study only one discipline. What do you think that was? After the Cultural Revolution, I caught the first wave of the Chinese students coming to Harvard. So what do you think they all want to study? Today, they all want to study economics. But in 1985, what do you think? There were exactly 4 PRC students in my class. What did they study? Yes? Of course. What is there to study but political science? Politicians run everything in China. They run the market, they run the business, they run the army, essentially. They run everything, so they say. And so state capitalism, of course, the state leads the market. It doesn't guide the market. It doesn't enhance the market. It is the market. So the end result, of course, is the market has to contribute to national interest. What is the national interest? What's defined by the politics. So market is not an independent entity at all. Okay, so having established that kind of norm and institution, let's come to the role of government in business. So as I said, I went through this slide already. So next, to come into your class. So does the role of the government then in these different political systems, does the role of the government vary according to the sector, to the industry? Well, I noticed that you study 3 industries that I'm very closely involved with. In fact, I still am involved with companies in all of these sectors. The first one is e-commerce and the internet industry. So how is the internet industry in China different than in other countries? Very macro. Yes?
First of all, I would say regulated.
Quentin, how is it regulated?
Censorship first.
Okay, first censorship, we'll talk about Google in a minute, right? So there's censorship, what else? So there's censor, but that's the same. All foreign internet companies that come to China are censored, right? Okay, so that's not really differentiating foreign and domestic. What else? Has anybody bought internet stocks, Chinese internet stocks? So none of you have read the prospectus of an internet company, like Tencent, Baidu, or Alibaba. So are they legal entities? Are they owned by a legal entity that's offshore? Okay, are there any lawyers in this class? Okay, so the internet industry is illegal in China, essentially. And it's always one of my first jobs was to invest in internet companies. And so basically every single internet company has to go through a very complicated ownership structure. And to go public on the Hong Kong Stock Exchange or on the New York Stock Exchange is even more complicated. So all of them have some kind of structure that would make investors highly uncomfortable. And so you buy at your own risk. All right, what else makes the competition very different than other countries? The most important part about Chinese internet industry is what? Here, no, the ladies? No? No taker? Okay, the most important part about the internet industry is competition. Why is that? Because, let's put it this way. Let me ask you the question. Do you think Alibaba is a market play or a political play? How many people think it's a market play? Market play. Meaning it's the best market player in the world. So how many people think it's a political play? Okay, so most of you see the competition. So, as you know, most internet companies don't operate in China. And so what kind of environment is it? It's a highly uncompetitive business, therefore. Uncompetitive in terms of foreigners. The best foreign technology company cannot just come in. So the question has always been, if Google is there, can Baidu be number one? If Facebook is there, can Internet.com be number one? These are questions that are, of course, irrelevant because as of today, they're not there. All right? And so the success of these companies is closely related to government policy. So then the next question is, do you think Jack Ma goes to the government every day and discuss economic policy?
I think maybe less now because as he's going abroad and he's trying to expand his business, I think he's going to be more to be a market player than a player.
Okay, that's an interesting question. What is he doing today? I don't know. But knowing Jack, I can tell you, Alibaba now is a conglomerate. It is most involved in finance. Now, we all know finance is the most regulated industry in any country in this world. Today, you still cannot wire money from one country to another without going through national borders, national regulation. And so the question, of course, is how did Alibaba get to provide small loans? As you know, most of my Chinese students in my Hong Kong class actually do not put money in what we call CDs, in 6-month deposit or 3 months, because the interest rate is unusually low. Even though the Chinese government lowered the interest rate last month, there's no sign of real, true liberalization of interest rate. So what do they all do? Well, for 500 RMB, how much is that in NT?
About 25,000.
Okay, so for 25,000 NT, you could put it into one of the instruments Alibaba has and get 5%. But it's a very small amount. But everybody puts money into those instruments instead of going to the banks. So of course Alibaba is taking a huge chunk of business out of the banks that should be running this business. Now, do you think that's highly regulated? Of course. So even if the government doesn't regulate it, they have to decide to acquiesce to it. They have to decide to let it be. And of course, more than that, Alibaba now has acquired licenses as a securities company, and they used to finance a taxi company, and so that if you pay with Alipay, if you take a taxi, I'm sure most of you have been to China, if you use Alipay to pay for a taxi, it costs less than if you actually pay a taxi driver in cash. And the biggest competitor to Alibaba in doing this taxi business is, none of you take taxis in Shanghai, you'll know, is not Uber, is Tencent. So these internet companies are all becoming conglomerates who are moving into everything and anything. But what is their essential business now? It's all financed. All of it has to do with regulation. So the question at the end of the day is, how much do you think the success of any company in China is attributable to policy? Even if you don't lobby actively, there is a wide network of understanding between private players and the government as to what is allowed, what is not, and who are the beneficiaries. And so, of course, in New York Times, you've already read, I've been interviewed, and in the same breath, in the same article, the reporter reports on how many different political elites had invested in Alibaba right before the IPO. So the reason they wrote about this is to highlight the fact that if you don't spread the wealth, you cannot survive politically. Whether the reporter is right or wrong, I'll let you decide yourself. But this is the issue with China. China's political risk for a firm that, like Harry's firm, I think is very difficult to calculate. It's invisible, it's hard to quantify, and everything needs to be quantifiable these days for an asset manager. But things are changing very quickly, and as you know, in Hong Kong, you can start buying A shares as of last week. And so things need to be quantifiable. But let's go to an example to talk about how you really quantify the risk in China. If you're an investor in Google, which I have been a loyal investor since the IPO, I've been very distressed, of course, because as you know, they had gotten into trouble in China. So does anyone know what the trouble was with Google in China? Yes?
Was it that they refused to comply to the censorship norms?
Exactly. The search engine was required to censor certain things. For many of the things you could see about Taiwan, they were blocked. About Tibet, about many other things. And similarly, a few years before that, right around the time Yahoo invested in Alibaba, Yahoo had run into another problem. And does anyone remember that? Somewhat of a bigger issue. It was a privacy issue because they were giving away the identity of their users to the government, for government to track certain activities. So for that, the Yahoo investors were very upset. But the Google investors were the other way. Google had decided they were not going to compromise with the Chinese government and let the Chinese government censor the search engine, which would make it effectively a censored search engine. And so they refused, and as a result, of course, they had retreated. At first, they let you, when you search with Google, it would take you to google.hk. And then after a while, they decided they were going to leave the Chinese market completely, and they put out a statement which really angered the Chinese government. And so if you're a shareholder, here's the question. Should Google sacrifice the Chinese market, which at the point was a very small part of their business, but of course the growth is exponential. And here comes the question that the Europeans, of course, can answer very well, because you had talked about labor groups. The capitalist model of the United States has always been slightly different, actually quite different than Europe, and again, very different from Asia. For the US, of course, as you know, the mantra is a public company's ultimate responsibility is to the shareholders. So as a shareholder, do you want them to leave China? Can the management just decide to do what they want? And how are they interacting with the Chinese government? So a different kind of a cross-border private sector, public sector interaction. An American public company dealing with the Chinese government. And what is the responsibility to the public? Meaning, we should have a free search engine, that's to the public. They think that they should have conscience, they should have the right values, and it has to comply with their mission statement. Or to the shareholders who pay, like me, for the shares. And thirdly, to national governments, to be responsible to the government of the place where they work in, the market. So those are the questions that we'll just leave there, and I'll talk about. I've already run out of time. So I'll run through the next two very quickly. Again, something that Professor Lin is an expert in is the semiconductor industry, which I've been involved with several over the years and sat on the board of semiconductor companies for a long time. And I just wanted to put this up as an example because I know you study the high-tech industry as well, right, in this class. what is the most, of course, the premise of this slide, as you all know, the Chinese government's dream is to have a leading foundry like TSMC. Now, what is the most important value, competitive advantage of a foundry? I assume you all know what a foundry does and what their business model is. What makes a foundry?
R&D.
R&D. Okay, that's very good. Well, you know, TSMC really didn't have the leading R&D sort of edge when it started. But there is something more intangible than R&D. R&D, I could just hire the best from the best, you know, the best engineers in the world. And China certainly has money. They've been pouring money, loan and equity into these foundries. So why is it not able to? Why can't they have a Samsung? Why can't they have a TSMC? Samsung has an IDM, but why can't they have either of these? Thomas?
I would say the reputation of the, or the perception of quality of the product.
The reputation of the quality of the product.
Yeah, the reputation of the company itself and the perception of quality of the product.
Okay, bingo. That's exactly right. The reputation of the company. What is the part of the reputation of the company that's really important for a foundry? And this is what's you can't buy with money. It's trust. Because what does a foundry do? A foundry takes a design and just makes it. So Apple gives you the design and you just make it. So when TSMC makes an Apple chip, what is Apple worried about? Why don't they make it with some Chinese foundry? People steal, exactly. So do you think the government can actually help change this and create a foundry? Absolutely. But what is the price? The price is very high. And so here's where the government can come in again. How can the government promote its foundry industry? Well, there's several things they can do, but of course, what it has done, it has gone through these different these policies already, and so far, this is not enough. First is to restrict competition. So all products need to have local content. This is not dissimilar to the next slide I'm about to talk about in the auto industry, but also to basically say you need to have a Chinese partner, ownership structure, and that all foundries need to have certain local employment requirement. Now those are really easy to restrict competition. But the second part is to promote, to give loans, to give land, to give a lot of incentives for people to study engineering and to come into the industry and to do R&D as Martin said. So Beijing has made tremendous progress in all those regards, and I've seen it through one company after another. But the big issue is, of course, they need to protect intellectual property. But to do that is a huge sacrifice. They need to regulate their own players. And the cost may be too high, or the determination may not be there. But many people think that the success of TSMC, in addition to what Martin says is R&D, is Morris himself. And if any of you have heard Morris speak, Morris came from the United States, knew all of his clients since his background in the United States, and therefore people thought this is somebody we could somewhat trust. At the beginning, there was no trust either. Taiwan was not that different than China in certain ways, but Morris was able to get some orders and show continuously that he was trustworthy. And it takes a lot of time. So will China become a main player in the semiconductor industry? Well, this is where basically just having government enforcement is essential, but not also adequate. Then you need to have the private sector, basically the IC design industry, be built up, the supply chain, the human resources. But this is a much more complicated story, of course. And I just wanted to talk about the government's role in this. Whereas, of course, in Taiwan, the government had a very important role in stringing all of the players together to create an industry chain. And in return, of course, in Taiwan, you'll see that our TSMC leaders and other companies are all becoming important in government as well, in terms of not lobbying, but becoming a public opinion leader. The last slide I have, of course, is about the automobile industry, which I continue to be very involved in. And the role of the Chinese government in the global auto industry is very interesting because the auto industry, unlike semiconductor and unlike internet, is very hard to regulate. Why? Because a car is a car. And actually yesterday, Harry and I were in somebody's car, a very famous person locally who was driving a BMW and says to, suddenly turns around and says to Harry, "Can you believe this is the car I drove you in 12 years ago? And can you feel the difference?" And Henry says, no, it feels like a new car. He says, that's because it's German. It is the best. I will never drive a non-BMW car. And so I was laughing and I said, well, Chinese have a long way to go. But Chinese dream, one of the things that I had learned after I retired from Goldman Sachs and I got a PhD at Hong Kong U was that the first class I was totally shocked because I had been dealing with business leaders in China. I had never really seen a non-business, well, many government officials too. But this was a famous academic who in the first class says, China needs its own auto industry. And I was really surprised. So I asked the teacher after class, I said, do you think China needs its own perfume? So we shouldn't buy from France, we should have everything our own perfume, our own computer, and our own car. He says, whatever we can have, we must have our own brand. And that's the only way to make the country secure. So I thought about it, and it's already really stuck with me, and maybe that's why I went in to get the PhD. I thought it was so fascinating he thought that way. It was everything the opposite of what I had learned in business all these years. But the Chinese market is an essential part of the auto industry because it is the highest growing market. While after the global financial industry, the worldwide market is growing at single digit, especially Europe. Of course, without a doubt. US is picking up now. But the Chinese market is growing still at double digit. Even with all the problems, and for example, you see in Beijing, before APEC, they stopped basically all pollution, including cars, and giving out licenses. But you can't stop the Chinese market from growing. Secondly, the cost down initiative in China is so successful that basically for a car that is made in China, it became quickly much cheaper than Mexico, which was the best entryway into car manufacturing in North America, and it is now much cheaper than Romania, which is the biggest car manufacturing base in Europe. So every year I go to Romania. I have not been brave enough to go to Mexico, but every year I go to Romania, Italy, where the company that I'm involved with is also manufacturing, and in Shanghai went from 10% of this company's production base to 35%. And of course, the interesting thing is I'm going to show you first the next slide. It's also kind of hard to read, but you can't see this is a private company, so you can't really see. Can you see what kind of company this is? Like which country it's based in? Well, you can see, it's not really right. You can see New Business One this month. I just pulled out a particular month, February. The New Business One in this month, it's a cars company. They make steering wheel for all the sports cars, Lamborghini, Porsche. That's why we are in Italy. But they also make, they're the third largest airbag manufacturer in the world. And they invented actually the airbag. But they, in terms of manufacturing production, they're number 3 after Takata has, of course, gone into trouble recently. But the new business they have won, you can see around the world, in this month, it's entirely the gray pie you can't see, is all in Asia. All the growth is in Asia. So China not only produces the cheapest car for a while, it's now been surpassed by some other developing markets, but secondly, it also is the biggest consumer base for cars. And therefore, the Chinese are completely involved. And why do I say that it's totally integrated? Because the car industry, no matter how much you regulate it, people will go for the best car, the safest car. And you can't, the elasticity of price sensitivity is very different than other products. You need it to be very safe, even if it's more expensive. And so, is it very important for the Chinese government to want to promote its own brand? So far what it has done, of course, is that you can't produce a car by yourself. And so whether you're Shanghai Automotive or First Auto Work or Second Auto Work, all the Western car companies or famous brands and Korean cars all need to work with a partner in China. And has that helped the Chinese government move up in becoming a competitive player in the auto market? In some ways, yes. But the ultimate aim of becoming a leader in the auto industry is still very far away. And my final question to my part of the speech is, despite everything I've said, how does this effort compare to the United States when all those the car industry became what it is today, or has gone into demise today? But how did the U.S. government promote its auto industry? In many ways, actually, actually, it is reminiscent to after World War II, how the US government actually gave those companies a lot of support. But it seems like China is an entirely different story, but in many ways, actually, there are similarities, and that's room for an entirely different discussion. So on that note, I'll finish this part of the speech, and we hope to have some interaction with you after the break.
Just that we can go all the way to the end without a break. Is that all right? And we can start the Q&A section in the class before 9 o'clock. Okay. Okay. So the time about Q&A, and if any comments, any questions, please feel free to ask. Raise your hand first. Questions? Yeah. Do you address to both or?
Well, I think it's more Professor Arabi. Well, I think that nowadays, risk analysts are dealing with one of the biggest risk analysis ever, or at least a very important one. That is whether the euro will crash or not. So, my question is basically, how can analysts deal with such a forecast, and which could be the implication of a report given to a client about this topic?
Right. Well, that's actually, I'm glad that you said what report could be given to a client, because as I said, that really is the key, is to figure out whatever your forecast is, the real test for the client is what the implications are. And that is what has to be tailored to the particular client. Obviously, this is a very complicated business, and I didn't talk about how to do risk assessment. But let me simply indicate a couple of key elements that I think are key to the methodology of risk assessment and risk forecasting. First of all, you need to identify the major drivers, the major causal factors that you think are going to shape the future. And each of those then intersects with the others. And it's the intersection that begins to produce alternative scenarios. I think the key thing about risk is to understand and take on board the uncertainty. And above all, to persuade the client that they have to accept uncertainty. Clients always want certainty, but you cannot accept their desire for certainty if that is impossible to provide for them, right? So what you basically try to do is to define that uncertainty and to do a probabilistic and a contingent set of forecasts that present alternative scenarios, that provides probabilities, that indicates contingencies. In other words, what would happen in order to make one scenario increasingly likely relative to others. And then to track milestones, we call it milestones and turning points. This we don't have, chalk, I guess we don't, but just try to visualize a set of, a point here where we are now, and then you identify some scenarios that are based on the intersection of the key drivers, and imagine them as being points out there in space. And then you could have several possible tracks from here to each of those. And so the question is, where are you relative to those tracks at any given time? Are you moving along this track towards scenario A? And there will be milestones, just like on a road. You see one that says Taipei 80 kilometers, and another one, Taipei 60 kilometers, Taipei 50 kilometers. Those are all milestones that are telling you that you are still going in the direction that you thought. A turning point comes either when you see a fork in the road and tells you to turn right, or you suddenly see that Taipei is getting more and more distant from you. And so you realize you made a wrong turn somewhere. You have passed the turning point. The same is true with risk assessment. To basically say, are developments confirming our forecast that this is the most likely scenario? Or is it changing the probabilities and suggesting that we are probably moving or possibly moving towards a different scenario, or at least that the probabilities are changing? So risk assessment is, first of all, the identification of drivers. Secondly, the identification of alternative scenarios. Thirdly, the identification, roughly, of probabilities as to which ones are more likely than others. And then finally, the identification of milestones and turning points to adjust those probabilities as the situation changes. How many of you, and the basic forecasting is difficult. As one American wit said, the reason that forecasting is so difficult, a prediction, is because it's about the future. The future is unknown. And I think one has to accept that, and the people you work for have to accept it. They always want to push that risk down onto the lowly analysts, but they're the ones with the big office and the chauffeured Mercedes and the big salary. It's their job to handle that risk with the assistance of the risk analyst. You cannot eliminate it. You can try to reduce it, you can try to mitigate it, but you cannot eliminate it. How many of you have heard of the concept of a black swan? A black swan event. Anybody heard of that? It's a very famous book called The Black Swan. Oh, sorry.
Yeah.
Yeah, can you tell me what a black swan event is?
It's a catastrophic event that is remotely possible. Really, really remotely, but if it happens, that's
Okay. Okay. So it's a black swan event that is supposedly unpredictable, or at least completely unexpected, right? And in this case, catastrophic. You would simply say significant, could be upside down stuff. But it's something that is basically unprecedented. Barry, do you know why it's called a black swan event?
Because it stands among millions of possible events, and it's not one it's unpredictable.
But why black swan?
Because there are no red swans. There's white swans.
But there are.
Just one.
No, there are in one place anyway. Basically, Australia has black swans. I've been there, I've seen it. But basically, when the first European explorers went to Australia, they had never seen a black swan because all of the swans in Europe are white. So this was unimaginable for them. And so that shock of something completely unpredictable, unimaginable, is what has given the name black swan to something that happens that supposedly not only no one expected, but no one could have expected. If I brought some other deck of slides with me, I'd be able to show you two other examples of Australian wildlife that put the black swan in perspective. If you imagine a white swan, it shouldn't be that difficult to imagine swans of other color. There could easily be a pink swan or a black swan or a blue swan, right? That's not that far out of your experience. And to say that no one ever could imagine this is a lack of imagination, right? I showed them a kangaroo. Now there is a creature that is really difficult to imagine. Who could imagine an animal that is a mammal, but that has its babies in a pouch, and that has these kind of springs for legs? That really is unimaginable. You don't wonder why people were surprised by that. Far more surprising than the black swan. But the real surprise in Australia is the duck-billed platypus. This is something that looks like a rat, but it has a big beak like a duck. No one had ever seen that before. But what's really interesting about that is that a sample was sent back to England, and the best zoologists of the day began to examine it, trying to prove it was a fake. Because it was not only inconceivable, they thought it was impossible. Now those are increasingly serious failures in forecasting and risk analysis. It's not surprising that people get forecasts wrong, right? Because it is so difficult to predict the future. The real failure is not even to imagine what actually happens. To say that's black swan, inconceivable. And then what is even worse is when it happens to deny that it could possibly happen. So that is really the key. The key of risk analysis is to try to imagine futures that may seem unrealistic, but then put probabilities on them and to identify the contingencies that could actually make them happen or make them more likely. Yeah, over to, sorry. My eyesight stops.
No, right there.
Oh,
Yeah,
sorry.
Professor
Sorry.
Harding,
Yeah.
you've talked a lot about risk assessment.
Yes.
And I'm wondering what comes after the risk assessment. What's the stage after? I mean, you've assessed all the risk.
Yep.
You know the risk is coming, and let's say you're going down the road and you're approaching Taipei in 30 kilometers.
Yep.
How are you supposed to react as a company? Do you think like one of the best ways to face risk is like changing internally, or like passively or actively and doing lobbying?
Right.
Do you think there's a general approach to it, or do you think it really depends?
I think everything has to be tailored to the company. I think that I gave one of my slides had sort of the broad categories. We can go back to the one next to the last, which was just before your the hotel one. There it is, one before that. That basically one is avoidance, and just say we're not going to go there. That is very difficult to do if the highly probable upside is so great. Then the opportunity cost of avoidance is enormous. But in theory, that is possible. And of course, people have different risk appetites. One of the most interesting things that I learned in my experience in this risk assessment firm is how basically risk appetite, among other things, is correlated with interest rates and with liquidity. The more available money is, and at the lower the cost of money, the greater the appetite for risk, because you figure that the cost is more manageable. But there is a cost of the risk, and there is a cost of avoiding the risk. So you have to weigh those in making your assessment. Avoidance is the extreme version of risk, of lack of appetite. I'm just going to avoid it. I don't want to take the risk, however that's defined. Hedging and diversification is probably in portfolio management the most common approach. And it was reflected in direct investment in that idea that the Japanese came up with of China plus one, that you don't want to become entirely dependent upon China, your operations in China, but that the opportunity cost of avoiding China is so great that you can't avoid it. So you would diversify China plus one. If you are in indirect investment, in asset management, if you're trading or managing a stock fund, for example, that then is much more easy to do. You can diversify your portfolio much more easily, and you can rebalance it much more frequently. So diversification, hedging is another strategy. Basically having alternative investments so that if one contingency comes about that reduces the value of one investment, that same contingency increases the value of another. So basically it's an internal kind of rebalancing known as hedging. But what Shirley was really talking about is the most active form of risk management, which is really trying to shape the risks. And in the sense of politics, you try to basically influence government to make decisions that will provide upside opportunity and avoid downside risk for you. To do beneficial things and not to do harmful things. What I was thinking about is, as Shirley gave her presentation about what business leaders can do to try to shape that political environment, is that businesses so far have been much more focused on and much more able to engage in management of regulatory risks, of what government does. And especially if it is a highly granular, in other words, very detailed subject, businesses can be very effective because they can really devote huge amounts of energy and attention to the issue. They can provide very valuable information to government. That's where businesses can really have an impact. If it is a more general policy, then there are more actors involved, more stakeholders also involved. And so it becomes somewhat more difficult for businesses to shape the environment, to reshape the risk environment so effectively. The most difficult thing for businesses to do is to handle the non-governmental, non-regulatory risks. For example, one of the biggest risks of doing business in China, I think, is the rise of nationalism in China. And especially if you are seen as coming from a country that has somehow offended China. It's a huge problem for Japanese firms because Japan is constantly irritating China. It's an occasional problem for the United States. And sometimes even European countries. If they welcome the Dalai Lama, for example, then there can be some payback for companies from whose headquarters is in that same country. And these are not necessarily government actions. It's a societal reaction. And businesses, I think, do not seem to find it as easy to manage that kind of societal risk unless they're concerned about the direct safety of their employees. Or companies, Control Risks is the best example of this, that basically are a risk management company, but on very direct physical risks. Plant security, bodyguards for their top employees. Those are serious risks, and you manage them that way. It's really reducing the risk by protecting the asset. But more general risks, reputational risks, very, very difficult to manage. So you have everything from avoidance all the way to try to prevent the risk from developing. But again, the advice would have to be tailored for each company and each particular circumstance. Yeah, Raphael.
I'm noticing that lobbying and anti-lobbying money, there is like too much important, sometimes preventing innovation. Like for instance, I'm seeing about the automobile industry, you are talking about especially like electric cars. Something is like counterproductive today.
Why is electric cars going down?
Lobbying, sometimes lobbying can't be counterproductive. This is, of course, the huge debate. I'll let Shirley, or turn over to Shirley in just a second, because I know she has very strong views on this too. It all depends on the content of the lobbying. As Shirley pointed out in her presentation, as many of you said as well, governments realize that on many issues, technical issues of regulation, especially the more granular, the more detailed, the more specific, they need input from the private sector. You can't regulate effectively something you don't understand well, and who understands it better than the companies involved. So in that sense, some of the earliest definitions of lobbying in the United States actually were talking about providing information to government. And that if it's done in an objective way, can be very positive, not only for the company involved, but for society. What you're suggesting is the unhappy fact that not everybody provides information to government that has the general interest of society in mind, even if you knew what that would be, but rather is trying to gain favored treatment for themselves to protect from undesirable regulation. And when you cross that line, it's very difficult to tell. Of course, then you have an even clearer example of bad practice is when you go from providing information and political pressure to basically bribing. And that is not lobbying, it's bribery and graft. But this is all a very, very difficult spectrum. And all I can say is that Aristotle taught us, basically, or taught me, that there are always two forms of government, and I would say two forms of political system. There's the pure form and the corrupt form. And the pure form and the corrupt form can have the same overall structure, but a lot of it depends. The estimate is whether the people acting in that system are acting in the interests of society as a whole, or whether they're acting in the interests only of themselves. And that's the key variable, the key dimension, as to whether it's positive lobbying or the kind of biased lobbying.
I think that's a really interesting question. In fact, Harry and I forgot to conclude. So this is our joint slide. This is perfect that the question came up because what should the business leader be doing? Should we actively, we, as in you are in the business school, so I assume you'll all become business leaders. Should you be actively formulating economic policy, telling the government what they should be doing to promote whether the economy, the nation, or the welfare of the people, or should you just react to government policy? Should you try to maximize shareholder value and therefore lobby the government to have policies favorable to your company, or should you contribute to the national goals? As you pointed out, basically, should you worry about the welfare of the society, and how do we prevent business from giving government bad advice? And I would just say that the last point is what Harry and I forgot to conclude. There is self-interest in lobbying, and it's different than sound policy making with contribution from the private sector. And I would say that Harry knows my views already. We always disagree on this. Because coming from the finance industry, financial products are extremely difficult to understand. And I've been helping several senators, assistants in the United States, try to figure out regulation, because as you know, after the global financial crisis, there's a lot of new regulation in the United States on whether it's principal trading or derivative product distribution. And the fact of the matter is you have a lot of 30-year-old assistants working for senators and congressmen in the United States who have no idea what the products actually really do. But they have to draft the law. And they work all day, all night. A lot of them are lawyers. But all the fields now are extremely specialized. And if you don't know anything about real estate loans, how can you prevent the subprime crisis from happening? How does anyone know that you can take all these poor people's loans, put it together,